Hey there, Iguana Gang. Iggy here, ready to dive into the hottest topic in tech. Today, we're talking about Nvidia's mind-blowing success. But here's the kicker. Could this success be a ticking time bomb? In this video, I'll break down Nvidia's incredible rise, explain why it matters to you, and reveal the potential risks hiding behind those massive profits. Whether you're a seasoned investor or just starting out, you'll want to stick around. Trust me, by the end of this video, you'll see the tech world in a whole new light. Let's get into it. So picture this. Nvidia, the company that used to just make graphics cards for gamers, has just hit a market value of $3 trillion. That's trillion with a T, folks. To put that in perspective, it's like if every person on Earth chipped in about 3i75, that's how much Nvidia is worth right now. It's the first chip company ever to reach this insane level. Now, you might be wondering, Iggy, how did Nvidia get so big? Well, it's all thanks to our friend AI, artificial intelligence. Remember when ChatGPT came out and everyone lost their minds? That was like pouring rocket fuel on Nvidia's already blazing fire. You see, Nvidia's chips are like the brains behind AI. Without them, AI would be about as smart as a pet rock. Let's dive into the numbers, folks, because they're absolutely mind-blowing. In Nvidia's last annual report, their yearly revenue skyrocketed to a whopping $22.1 billion. To put that in perspective, it's like your weekly allowance suddenly tripling from $10 to $30. But hold on to your hats because it gets even crazier. Their quarterly net income, that's the money they get to keep after paying all their bills, grew more than 8 times over. It's as if Nvidia stumbled upon a magical money tree in their backyard and started harvesting 100 bills. This incredible growth isn't just a fluke either. It's driven by the massive demand for their AI chips, which are being snapped up by tech giants, research institutions, and even governments around the world. These chips are the brains behind everything from self-driving cars to advanced medical research. And here's the kicker. Experts predict this demand isn't slowing down anytime soon. With the AI revolution in full swing, Nvidia's products are becoming as essential as electricity in the modern world. It's like they're selling shovels during a gold rush, except this gold rush is happening in the digital realm. But here's where it gets interesting for us in Singapore. While Nvidia is partying like it's 1999, our local semiconductor stocks are more like wallflowers at the dance. They're not seeing the same crazy growth. It's a reminder that not all tech stocks are created equal. Now, what does this mean for our Singapore semiconductor stocks? Well, it's like they've been doing push-ups during the downturn, and now they're ready to flex those muscles. Companies like Micromechanics, Venture Corporation, and UMS Holdings have been quietly strengthening their foundations. They've been streamlining operations, investing in R&D, and positioning themselves for the next upturn. It's like they're runners at the starting line waiting for the pistol to fire. The global semiconductor industry is cyclical, and while we might not be riding the AI wave as high as Nvidia, our local players are diversified across various sectors like automotive, industrial, and consumer electronics. This diversity could be our secret weapon. As the industry recovers, these companies might not skyrocket overnight, but they could see steady, sustainable growth. It's like the tortoise and the hare. Slow and steady might just win this race. So, while we might not have a trillion-dollar titan in our backyard, our semiconductor ecosystem is resilient and adaptable. Keep your eyes on these local players. They might just surprise us all when the market turns. Micromechanics. These guys make the tiny tools that help build chips. They've had a tough time lately, but they're not sitting on their hands. They've started this cool 5-star factory thing to make their factories run smoother than a well-oiled machine. Venture Corporation. This blue-chip company is like the Swiss Army knife of tech manufacturing. They've got a fat stack of cash and they're planning to launch new products in 2024. It's like they're loading up their slingshot, ready to fire when the market recovers. UMS Holdings. These folks make equipment for the big semiconductor players. Their CEO, Andy Luong, is more optimistic than a kid in a candy store. He's seeing good signs from the major semiconductor equipment makers. AEM Holdings. They're all about testing semiconductor stuff. While they've had a rough time lately, they're betting big on the rise of AI. It's like they're surfing and they think a big AI wave is coming. Franken Group. These guys are like the supporting actors in a blockbuster movie. They might not be the stars, but the show can't go on without them. They're staying strong with a solid balance sheet ready to ride the recovery wave. Now here's the million-dollar question. How will these stocks fare for the rest of 2024? Well, if I could predict that with 100% accuracy, I'd be sipping piña coladas on my private island right now. But here's my take. The signs are pointing towards a recovery. The global demand for AI is hotter than a summer day in Singapore, and that's great news for chip makers. Plus, with smartphones and PCs bouncing back, it's like adding fuel to an already burning fire. However, and this is a big however, we're not out of the woods yet. The semiconductor industry is more unpredictable than Singapore weather. We've got geopolitical tensions, supply chain hiccups, and the ever-present risk of overproduction. So, what's an investor to do? Well, as I always say, diversification is your best friend. Don't put all your eggs in one semiconductor basket, no matter how shiny it looks. So, what does this mean for you, my fellow investing iguanas? Well, it's a classic case of don't put all your eggs in one basket. Sure, Nvidia looks hot right now, but remember, what goes up must come down. Or at least it usually does in the stock market. Here's my advice. Keep your eyes on the big picture. The semiconductor industry is cyclical, kind of like the seasons. Right now, it's summer for Nvidia, but winter could be coming. Don't get caught without your jacket. Nvidia faces a complex array of challenges as it strives to maintain its leadership position in AI chips and sustain its impressive growth trajectory. Key risks include geopolitical and regulatory issues, particularly potential new export restrictions to China and other countries which could significantly impact revenue. Increased competition from tech giants developing their own AI chips and traditional rivals like AMD and Intel pose threats to Nvidia's market dominance. The company must also navigate supply chain risks, particularly its heavy reliance on Taiwan Semiconductor Manufacturing Company, TSMC, for chip production, amid geopolitical tensions in the region. Additionally, Nvidia grapples with the need to continuously innovate to maintain its technological edge, diversify beyond its core GPU business, and manage its high stock valuation. The company faces potential regulatory scrutiny due to its dominant market position and must contend with macroeconomic factors that could impact demand for its products. Attracting and retaining top AI and engineering talent in a competitive market remains crucial for Nvidia's continued success. These multifaceted challenges underscore the complex landscape Nvidia must navigate to sustain its growth and market leadership in the coming years. And there you have it, folks. Nvidia's success story is truly remarkable, but as we've seen, it's not without its risks. Remember, in the world of investing, what goes up doesn't always stay up. It's crucial to stay informed, diversify your portfolio, and always think long-term. If you found this video helpful, do your fellow investors a solid and smash that like button. It really helps the channel grow. And hey, if you want more juicy financial insights delivered straight to your feed, hit that subscribe button and join the Iguana gang. We're on this investing journey together. Got questions or topics you want me to cover next? Drop them in the comments below. Until next time, this is Iggy, your friendly neighborhood financial iguana, signing off. Stay savvy, stay curious, and keep those investments growing.